This Malaysian ETF is beating both the S&P 500 and Nasdaq 100 in the first 6 months of 2024. For those of you guys who don't know, the Malaysian stock market is actually doing really well this year, and it's the best performing stock market in Southeast Asia by far. So let's take for example Singapore. Their index returned 2.8% in the first 6 months of this year. If we look at Indonesia's IDX composite, they are the opposite, so they're negative 2.8% for the year. If we look at the FBM KLCI though, we're up 9.3% so far in the first 6 months of 2024. Finally, Malaysian stocks are doing well because I've always wanted to invest in it. It's just that, let's be honest, we haven't been the best performers. We've been struggling a bit over the last 5, maybe even 10 years. But it's nice to see this change in 2024 and hopefully it can continue. But that's not the topic of today's video. Today, I wanted to talk about this specific ETF, which is doing even better than an FBM KLCI. So let's get through it. So the ETF that I'm talking about is the Malaysia Momentum ETF with the ticker symbol MOMETF. So they're trying to be a bit smart, I think. They're trying to merge the words momentum and ETF, which is why they have the MOMETF. I'm just going to call it MOM ETF because I think that's the easiest way to call them. Anyway, I'll go through what this ETF is all about. But before that, let's do a quick comparison with other indexes in the world. Now, first some context for those of you guys who might not know. Over the last 10, even 15 years, the best performing stock market has been the US by far. There is no other stock market that has come even close to the returns that the US stock market has given. And the two major indexes in the US that have performed well is the S&P 500 and Nasdaq 100. So there's a lot of ETFs that track these two indexes, and the returns has been crazy over the past 10 years. In fact, over the last 10 years, on average, both of these ETFs, they've given more than 10% per year. That's like double what ASB can give us, right? In fact, these ETFs are so good that I recommend for beginners, it's usually a good place for you to start. I mentioned this in the video as well. And a lot of investors globally, they all invest in these two ETFs. So now let's go through why. So in the first 6 months of 2024, the SPY ETF that covers the S&P 500, it has gone up by 15%, 1.5, and that is a pretty good amount for just 6 months. If you look at the QQQ though, which covers the Nasdaq 100, it has gone up by even more. It has gone up by 19% in just 6 months. So invest 1,000 ringgit, you'll get back 1,190 ringgit. Again, this is really high. It's actually higher than normal years, and it's why a lot of investors want to invest in the US. Well, when we're looking at our Malaysian MOM ETF, it's up by 22% this year so far, beating both indexes. So what's up with this ETF and why is it doing so well this year? But before we get there, if you guys want to invest in any Malaysian stocks or US stocks even, including the 3 ETFs that I just talked about, then check out Moomoo. I actually put a lot of my money there right now. It's really easy to use, it's perfect for beginners, and their commissions are also pretty low, which means, it's good because we pay less whenever we make an investment. If you guys want to sign up, I'll leave my link down in the description below. If you invest or deposit, don't even have to invest, if you deposit 1,000 ringgit, you'll get cash vouchers up to 150 ringgit. And if you deposit 10,000 ringgit, you'll be able to get some random fractional shares. I think you can get Nvidia if you're lucky. So yeah, use my link, I'll leave it down below. Anyway, back to the video. So what is this Malaysia Momentum ETF all about and why is it doing so well this year? So as its name implies, this ETF, it invests in Malaysian stocks that are showing the highest momentum in terms of price. So to put it in a simple term, it's basically investing in Malaysian companies that are in strong uptrends in terms of price. So we want to see the price going up and up and up. It's in a very strong uptrend. This ETF, it looks to invest in just those companies. This is actually a pretty common approach. So this is not something new. Momentum investing is something that has been around for a long time. And I remember reading somewhere where these researchers or statisticians, I don't know what they're called, they did some backtests and they found out that the only trading strategies that managed to beat buy and hold are strategies that used momentum principles. But I can't remember where I read that, so I can't share any sources with you guys, so you guys will just have to trust me on this one. So we already know that the Malaysian stock market by itself is already doing very well this year. But this ETF, it tries to bring it even further by only investing in the very best companies in Malaysia, not in terms of fundamentals, but in terms of price momentum. And this entire ETF, it also tracks an index. So the index is a bit long, the name, so let me read this. It's the Dorsey Wright Technical Leaders Malaysia Index. And this isn't some random index created by some random dude in his house. This index is created and managed by Nasdaq themselves. So how this works is, this ETF, it decides which stocks make the cut, and then the ETF, it just follows it directly. So this means that the fund manager of this ETF, which is Affin Hwang Asset Management, they don't get to choose which stock gets in, and they don't get to choose how much to invest. They just have to follow it directly. But how does Nasdaq choose which stocks makes the cut? What criteria do they use? So first of all, the companies must be valued at least 150 million US dollars. So as of the time I'm recording this video, that's about 700 million ringgit. So only companies that are worth 700 million ringgit or more can make the cut. I think this is good. This rules out a lot of those, smaller penny stocks that Malaysian uncles and aunties love to goreng for a quick profit. Those companies, they're not really sustainably going up, right? It's like a one-day move and then straight back down. So this index, they want to avoid that. That's why they have the market cap rule. And then they also have a volume rule, which means that there's a minimum volume requirement, which is also good because it only picks the most liquid stocks. We don't want to invest in stocks that don't have a lot of traded volume. We don't want it to only trade like 100 shares a day. I think the requirement is like it needs to trade $100,000 worth of shares every single day. So once they've filtered out all these companies that meet those criteria, they will pick 20 stocks with the highest momentum scores based on their own methodology. So I looked at the website. Apparently it's based on things like supply and demand, price movements, as well as relative performance compared to other stocks in Malaysia. So relative performance means, let's say CIMB is up 5% this year, Maybank is up 10%. So relatively, Maybank is a better performer than CIMB. That's kind of how they choose, right? Momentum. And because this is an index, it's not really an active style of management where every single day they're going to trade in and out. How it works is they will do this exercise once every 3 months, and then they will update the list based on, again, the top 20 stocks with the highest momentum scores. And that's why if you look at the top holdings as of today, we'll see companies like YTL Power, Sunway, Dayang Enterprise. These are all Malaysian companies who are all up more than 50% this year. And these companies, they will probably still stay in this index for as long as they continue to do well. Now this all sounds perfect, right? We only invest in the best performing stocks and we're all gonna be rich. Whoop-de-doo, right? Well, there are some things that we will need to consider when investing in these ETFs. As usual, there are always cons. I'll talk more about that later in this video. But I gotta say now that momentum investing as a strategy, it has worked in the past, but there's no guarantees that it will work in the future. Just like with anything else in investing, right? But personally, I am a fan of momentum investing. I do invest in momentum ETFs in the US as well. So, people commonly invest in the S&P 500, but there are also ETFs that very similarly choose the highest momentum stocks and then just invest in those. And that's why I'm a huge fan of this ETF. To be honest, I didn't even know that the Bursa Malaysia stock market had ETFs until very recently. I just found out about it. But you guys know that right now, I am not really a fan of investing in individual stocks. I would rather invest in ETFs for my long-term portfolio. I made a video recently about the highest dividend stocks in Malaysia, and you guys loved those videos. But to be honest, I would not really invest in those stocks just because, like I said, I would rather invest in ETFs. I'm pretty sure I said that in that video too, or at least I hope I did. Those are good companies. I would just rather invest in ETFs. But yeah, so apparently Bursa Malaysia has a few different ETFs, but this MOM ETF, it's actually perfect for me for a few reasons. One is that it tracks an index rather than there being an active fund manager who decides. So like I said, Affin Hwang, they don't choose which stocks to invest in, they just have to follow the index. So that's one criteria that I like. It's more passive. And then two, it covers Malaysian stocks. Obviously, like I said, I have been wanting to invest in Malaysian stocks. It's just that one, our stock market hasn't been doing so well, but now it is. And two, I didn't want to invest in individual stocks. Even though like Maybank is a good company, I would just rather invest in an ETF instead. So yeah, second criteria, I think that's really good. And then third criteria that I like about this ETF is that because of the way it invests, because it's momentum investing, it's a bit more aggressive, which is what I like. I don't really like conservative investments. I think for people my age, trying to maximize growth is probably the best way. So I want to invest in the fastest growing companies in Malaysia, if not fundamentally, then at least in terms of price. And I don't mind taking on a bit more risk to get there. And yeah, I guess if you guys didn't know, investing in these kind of companies, usually it does mean that we are taking a bit more risk for that potential higher returns. So everything sounds perfect, but there are some things that you will need to consider. So first is that this ETF, even though it is a momentum ETF, it will only do well if the Malaysian stock market as a whole does well. Obviously, if let's say every single company in Malaysia is doing badly, we're down 10% on the year, you can try to find the best performing stocks, but it will most likely still be down on the year. So like I said, yes, the FBM KLCI, it is up 9% so far this year in the first 6 months, and that's actually extremely good. That's actually the best performance we've seen in 14 years. So the last time we did this well in 6 months was in 2010, a long time ago. So yeah, because the FBM KLCI is doing well, that's why this MOM ETF can do well this year as well. If, let's say, in the future, the FBM KLCI starts to turn back down, then I also expect this ETF to start doing poorly. And we can see that, in the last 3 years, 2021, 22, 23, this ETF, it didn't do as well as it's doing this year, and that's just because the FBM KLCI, it didn't do so well either. One good thing that I like though is that this index, it did outperform the FBM KLCI in most years ever since its inception. One thing I wanted to say about the Malaysian economy and the Bursa Malaysia stock market though is that I know some of you guys might think I'm crazy for saying this just because we're so used to being pessimistic about our country, but I do think that we're in the right place right now. We're going in the right direction, and we should see some good growth over the next few years. So for example, we are getting a lot of foreign investments right now. I think we saw it with Microsoft, with Nvidia, and a few other chip makers as well, which is why we're seeing companies like YTL Power do so well. These data centers, they're built in Malaysia, they need energy, and YTL Power is supplying that energy to them. And we're also expected to have the largest data center capacity in the entire Southeast Asian region by far, by like a huge margin. Just look at this chart. And this is based on Morgan Stanley's own research team. So yeah, I do think that we've had a lot of bad years. This year we are doing well. I do expect us to continue doing this at least for the next 5-10 years. Anyway, enough of talking about that. There's still one more flaw that I need to cover about this ETF. So as I said earlier, even I myself, someone who is a personal finance nerd who looks into this stuff a lot, I didn't know that Bursa Malaysia had ETFs until very recently. And because I didn't know, it's obvious that a lot of other Malaysians probably didn't know about this as well. And that's where the second flaw comes in. Because people don't know about it, this ETF has very low volume. It doesn't trade a lot every single day, which means that the bid-ask spread is wide. For those of you guys who don't know what a bid-ask spread is, so in a normal, very liquid market, we'll usually see that the buy price and the sell price, they're very close to each other. So let's take Maybank as an example. I took this screenshot on the weekend when markets are closed and there aren't a lot of orders, but even then, the bid and ask spread was only 7 cents. This is the price between, I guess you can see here, 9.98 and 9.91. That spread is only 7 cents apart, which is less than 1%. And you can see that there are thousands of orders placed here, 1,005, 12,006, 8,000 lots all placed there. So you can see, very liquid, a lot of things happening. In a normal market, when the markets are open, the bid-ask spread between Maybank will probably be like 1 cent. So if you want to buy, it's 9.99. If you want to sell, it's 9.98. That's a very tight bid-ask, and that's what we're looking for. But when I check for the same with this MOM ETF, there's literally 0 orders placed on the weekend. You can see the market is closed, there's no bid, there's no ask, meaning even if you wanted to sell it, there's no one to buy it. If you wanted to buy it, there's no one to sell it. But don't worry, I wouldn't have made the entire video about this ETF if this was a real issue that wasn't solved. So Bursa Malaysia is also aware of this, and they have market makers in place. So market makers means that when the market's open, these, I guess, institutions, they will place a buy order and they will place a sell order so that retail investors like me and you, we can buy and sell at any time we want. The only issue is the bid-ask spread is kind of wide just because these market makers, they want to make money as well. I think it was something like 3%. So that basically means if you buy it and then you sell it immediately, you would lose 3%. That's the bid-ask spread. I'm not 100% sure. I'll just take a screenshot tomorrow when the markets are open and I'll just put it here because I'm recording this now and it's a Sunday, so I can't check. Like I said, the bid-ask now is completely empty. Something you can do though, if you don't want to lose this 3% instantly, is that you can place a limit order instead of a market order. That's what I did myself, and I just had to wait a few days and I got filled. I don't know, I guess someone sold it to me. But if you didn't understand that whole part, just don't worry about it. Honestly, you can just ignore it if you're a long-term investor because it won't make a huge difference. I'm just sharing this for transparency, because there's not a lot of volume traded, we will pay a slightly higher price to try and be invested. Anyway, all in all, I really like this ETF. I'm glad that I found out about it, and I've actually invested in it, I think sometime last month. I think maybe in early June I started to invest in it, and I will likely continue to invest more money into it. It's something that I've always wanted. Like I said, I wanted to invest in Malaysian companies just to support our local economy, and even better, now I do think the Malaysian economy will continue to do well. And with this ETF, it fits my investing style. I don't have to actively do research about what's invested in. I'll just trust the index and then, just DCA, passively invest, and hopefully see its value grow up over the next few years. As usual, you guys should do your own research before you decide to invest. See whether it's something that is comfortable for you to invest in. And if you guys want to invest in Malaysian or US stocks and ETFs like this one, then sign up for Mumu. I'll leave my link down in the description below. Anyway, thanks for watching this video to the end, guys. Give us a huge thumbs up if you enjoyed it and subscribe to my channel if you haven't already. See you guys in the next one. Peace out.